Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Take a look at some of the stocks on the move today. We can do that with Bloomberg's Billy Lipschultz. Billy, what are you looking at today?
Yeah, we're looking at a flat S&P 500, but as you mentioned, plenty going on under the surface. Want to start with Cisco Systems, ticker CSCO. I know you guys are going to touch on it later in the show, but down right now about 10%. This comes after headline earnings. Pretty darn good. But when you look under the surface, margin outlook weak, BI analysts saying that they expect the company to have to mitigate further margin erosion. We saw Bank of America coming out saying that it's not only their overall memory prices, but also the mix. Do want to just call out, though, that Cisco Systems before the print year to date was up 11%. So on our equities desk, we sometimes call that price to perfection. So missing expectations, the buy side will look for reasons to sell the stock, but you never really want to see one of the bigger companies in the S&P 500 down almost 10%. Its worst day since November 2023.
The company started by two Stanford professors who all they wanted to do was send mushy love notes to each other over their computers.
This is my favorite part about talking Cisco when you're on, because it's the same story, but it's new to listeners.
It's right before it's perfect.
Exactly.
It's like we planned it that way. What's next?
Well, you're talking about Valentine's Day. It has love in the name. AppLovin, ticker APP, down 17%.
Ouch.
This is a company that has been under pressure given uncertainty around the AI impact, down 43% year to date. That is your worst performer in the S&P 500. Again, earnings not that bad. This is a company, though, that uses mobile app marketing. So if you ever play any of those games on your phone, they're typically the ones serving you those ads. So fourth quarter results and outlook not that bad, but there's so much uncertainty around AI disruption, how it's going to impact the business. This is a company that was under market selling pressure the last few weeks.
It's also a meme stock, right? Or it trades like a meme stock a lot.
Trades like a meme stock. Its valuation is quite lofty. We saw this company be one of the best performers over the last few years. There was a lot of potential excitement. We do also see about 5% of the shares currently sold short, which is actually pretty high given a stock is down almost 50% year to date. So it does have a bit of that retail trader flavor. But I would say at least trading patterns recently, less meme stock and more ouch.
All right, one more quick.
Equinix, ticker EQIX. They're in the data center space. Surprise, surprise, they beat expectations. Shares up more than 12%. Year to date, up about 28%. So as we continue to use OpenAI and XAI and Anthropic to do our jobs, or also just create fun videos, data center capacity and demand really outstripping expectations. So Equinix off to a hot start, providing a bit of a boost to expectations for some of those private companies in the data center space, which, again, have been challenged when you look at their stock performance over the last 18 months.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.